Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Today, Tuesday, February 25th, 2014. It's around 3 p.m. Eastern Time. Markets are basically flat to slightly negative. S&P down 1.75 points, Dow down 21, NASDAQ down 5 on the day. Couple interesting factors about today. First of all, yesterday we saw a big reversal, and in yesterday's free video that was posted on YouTube all over the internet for all of you guys to view for free, I discussed how early in the day the markets were higher than the all-time high on the S&P 500. But I said to you guys, if they close it back below, then there's no breakout. And sure enough, what happened? A late day sell-off, just like I talked about, and they closed it back below. Why did it sell off the second half of the day yesterday? And you can see it very, very clearly right here on the chart. The essence of it is essentially the institutions continue to sell. And a lot of people are kind of perplexed and, asking me, how do I know the institutions are selling? Well, it's pretty easy, actually. Last week, we saw data saying that about $10 billion had flowed into the markets from retail investors. And basically, that's money going into mutual funds, and they can track that. No institution invests in mutual funds. Institutions run the mutual funds, so they do it on their own. They do it that way. They're never going to be putting individual amounts of money into individual mutual funds. So that's how you can track the average investor putting money in the markets, all right? So that's number one. And the $10 billion that was approximately put in was basically the largest amount in 3 months that went in. So the small investor is going back into this market hardcore, hook, line, and sinker. So then the question has to be asked, well, how do you know that the institutions are not buying the market? Well, pretty easily. And the answer is very simple. If you have average investors, mom and pops, buying a huge amount of the market right here, putting $10 billion in 1 week into the markets, well, if the institutions were also net buyers, this market would be blowing through the all-time highs on the SPY. Again, considering over the last few weeks money has been flowing in from the retail investor, if the institutions were buying, this market would be 3% higher than it is right now, maybe 5% higher. And we're not seeing that. What we're seeing is a market that is right now trading basically in line with the January 15th high. So with all that money that's been flowing in over the last few weeks from the retail investor, at record levels essentially, if the institutions were buying, we would be much higher. And again, we're not seeing that. So bottom line is, the institutions are selling. That's why, again, you popped up here and you sold off. Today, look at this. Early in the day, we moved up. We made a little pivot high, lower high, by the way, which is technically bearish. And now we're sitting basically on the flat line or slightly negative on the markets here. Be interesting to see where this market closes. But really, as a technician, just watching the charts, what do I want to see from this market? Well, really, I'm just watching that S&P high, which is around the 150.80 level. You can also actually now reiterate a new level, which would be this high, and you want to see a close above that high. But right now, we'll stick with the 180.52 level on the S&P 500. As long as you do not close above that, according to what I'm seeing, you just continue to expect at some point a pullback in the market. And again, this is the general view. It doesn't mean necessarily today it will start, tomorrow it will start. What it tells you is essentially that if the institutions are net sellers, they're the ones in the know. And I kind of did this. I did a little analogy on the radio yesterday when I was on my radio spot, and I talked about how essentially you have to look at it like this. The institutions are the Hall of Famers, the major leaguers. They're the NFL football stars. They're the ones that have more information, more experience, inside information, and all the computer programs in the world that are way better than you and I could ever be. So if they're positioning themselves by selling the market, well, in theory, 9 out of 10 times they're going to be right. Now, maybe not 100% of the time. Occasionally there's a mess up like in 2007 where they just kind of went willy-nilly and messed up. But generally, they're going to be right. So in this case, for me personally, I'd much rather be on the cautious side of the upside and more looking for a little bit of downside pullback. And again, I think that logic makes perfect sense. And again, we can just follow the technicals very clearly. And again, just watch that 1850 and a half-ish, 1850.84, I think was the exact high from January 15th. A close above there would possibly bring you up to this pivot high here. Really, you want to see now a close above this high from yesterday as your big level. Okay? And again, if you close above that, as I've said to my members multiple times over, you're not going to get much upside. You'll get about 1 to 3% upside from that point, and then you'll just see another push down. Institutions will take another leg and push and sell into it as well. And again, there's a bunch of algorithms that I've calculated into this and why this happens. I'll leave that for our members here at InTheMoneyStocks.com. But suffice it to say that right now, until this market proves me wrong, I still think that the market has net sellers by institutions. Anytime the little investor is a buyer, that's always a warning sign. Doesn't mean, again, that today is going to be the day it collapses, but it's kind of a warning sign. Just like in 2007 and 2000, net selling from the institutions and the little investor, the mom and pops, were just buying recklessly. We see margin, another signal that tells us that these small investors, a buyer here, net buyer by a huge amount, is that the small investor is maxing out their margin. Margin, what is margin? Margin is the amount of money being borrowed to buy the market. All right, so that means if you have 100,000 in your account or 10,000, based on overnight margin, you're allowed to borrow 2 to 1 of that. So if you have 100,000, you're allowed to buy 200,000 worth of stock. 10,000, you're allowed to buy 20,000. And we're seeing that that's being maxed out by the average investor as well, which is a dead-on giveaway that there's probably a limited amount of time left on this market and the ability for it to do its thing. Okay? And again, at this point, it's a waiting game for the next panic to set in. What is it going to be? What could it be? Could be out of Europe. I think more likely it's going to be more currency issues from South America, maybe Turkey, and then also you never know about the Kiev situation in the Ukraine. And I think one of the biggest things really not being discussed on everyday kind of financial media is the issues in China. It's been broadly ignored. Yes, they've mentioned it here and there, but China, guys, the amount of subprime issues that are going on right there, I mean, they have just extended themselves to the point where it's worse over there than the U.S. in 2007. And again, it's just a matter of time. So, could it be a year from now? Sure, it could. I mean, I've seen them, especially because they have more of a mask over what's going on. They don't really release real numbers. When they give out their economic numbers, it's always fudged, although then again, I believe that the U.S. numbers are fudged as well. But the question is, how much money can they print kind of just mysteriously behind the curtain there before it all comes collapsing down? And they might be able to hold it up for a little while longer before it really hits the fan, if you know what I'm saying. So, it's kind of putting us in a position here where upside reward is minimal. Yeah, sure, they could take it a little bit higher, but minimal upside. And then once that SHI whatever hits the fan, then you're going to get the bigger move down. And again, China's the second biggest economy in the world at this point, back of the United States, so it will have a global impact, just like the U.S. prices did and spread all the way around the world. So, some interesting stuff there. I mean, I'm not going to say much more, but I think there are some interesting factors here at work, and let's take a look at a couple stocks. Amazon today is having a pretty solid day. Let's flip over to the daily chart. This stock overall is still macro bearish, but you can see today it's kind of popping into that 20 MA. Even if Amazon's up $20 on a day, it's still overall inside of this bigger down move here from the highs right into earnings. So that would still be net bearish. But again, short term, they could pop this thing up a little bit, and that is what they're doing. Apple today continues to see a little weakness after a small bounce yesterday. Notice where it's right back to the 20 MA again, which is current support. The more it hammers on that, the more I think eventually it could break through and go to this gap fill right here, right around the 510 level. And then I think eventually it's probably going to the 200. I actually was expecting a little bit more of a bounce off of the 20 MA than just yesterday, so we'll see if we get that in the coming days. But to be honest, at this stage, the fact that it's retracing like it is and the fact that the market wasn't able to close above those all-time highs yesterday, I have to be telling you right now, I mean, I'm in the position of thinking that this market could be in a dire situation, and with that, Apple could actually start to decrease and fall back at least to gap fill, if not the 200. So just be aware. I called the top right here perfectly. I thought we'd get a bounce off the 20. We got a one-day bounce yesterday. Now I'm going to just go into a neutral setting on this stock. I don't trust it enough at this stage to give you a bullish bias on that anymore. GLD today, gold up 48 cents. You are getting near a shorting opportunity on gold, which is at the 130 pierce on the GLD. So it just has a little bit more to go. I'm hoping maybe tomorrow we get that on GLD, and then I will take a short position on that for a pullback. And it's not going to be a big pullback, but you'll get a pullback of $3 to $5 easy on it, in my opinion, at least. All right, so we'll look for that as well. Um, what else is moving on this market? Let's take a look at oil. Oil was down earlier today. It still continues to be down, but has come back pretty decently off the lows of the day. USO just down 16 cents. That's a pretty minimal move. JP Morgan, JPM is down. JPM is actually taking a pretty big hit today, and I think this is one of the standout stories today in the overall market that's pretty flat. And what you can see here, this is the daily chart, and notice the wide range bar here, right? Wide range red bar, and then you got 1, 2, 3 inside bars. That's known as an in spirit of bearish pattern. And then ultimately look at the drop you got off of that. And bearish pattern speaks for itself. It means the stock should fall, and sure enough, today you are falling. But, that's a pretty weak showing. I mean, for a market that's basically flat to slightly negative, JPM's down 1.5%. And you got to wonder what's going on there. I know a bunch of JPM executives over the course of the last month or two have committed suicide. I mean, I don't know. Who knows what's behind that veil? But kind of interesting to just see the price action on that stock. And it's got to make you wonder, has the fact that too big to fail has been totally ignored, could that be a major new issue maybe years down the line from now? But, I mean, think about that, folks. Think about how much clamoring there was to make these banks smaller, so if one failed, it wouldn't be the whole end of the civilization as we know it in terms of financial markets. And here we find ourselves very clearly in a situation where JPM's bigger than it was in '07. So is Bank of America. So is Citigroup. So is Goldman Sachs. They're all bigger. There was no such kind of making of smaller. And you watch my words right now. This market will feel that pain at some point. It might be 5 years down the line, 10 years down the line, but there will be a mistake made again. As unfortunately human nature is to repeat our mistakes over and over again. There will be a situation that comes, and we'll have to see again how it all plays out. But not a good scenario in my opinion. Okay, so that's what we have going on here and on JPM. And I'm just kind of scanning through to see if there's anything else out there. But yeah, it looks like it's about it right now. Let's take a look at Goldman, see if Goldman's performing any better today. Yeah, Goldman's very weak today too. Look at that, down 280. So financials really weak today. They're really putting a lot of pressure on this market. The SPY continues to be right around the flat line, down about 2 pennies on the day, with the S&P down just under 2 points. And flipping to a couple other stocks, Tesla's having a big day today, trading just underneath $250. This stock got an upgrade to like $320 price target. Ridiculous upgrade. I mean, basically a 50% upgrade on the stock price. And most people would say, wow, that's a great move. I say, sure, it's a great move. I tip my cap to it. But you know what I remember? I remember the upgrades on Apple at $700 a share. I remember the upgrades on Twitter just a few months ago at $75 a share. And look at where those stocks are trading now. Look at where they went to afterwards. And anytime these analysts kind of come out and get all like, oh, it's going, up a huge amount when it's already at its highs, oftentimes that's a good indicator of a potential top. And that's what I think. I think you could have a little bit more upside, but honestly, around 250, 275 on Tesla, I bet you it starts putting in a top. So am I short Tesla right now? No, I'm not. Would I be interested in picking up some puts for a few months out, maybe early next week after the dust is settled? Yeah, I think that is a good possibility, and I have no problem starting to look in that direction at a certain time. Okay, huge volume on that. Oftentimes we also see a market that tops out on big volume, or a stock in this case. 29 million shares traded on Tesla today. That is a huge amount of volume. It'll probably put in one of the biggest days of volume in the last 6 months to a year on this move here. So we'll keep our eyes on that one as well, folks. What else is moving today? That's about it. I mean, we have some big movers in the biotech. ITMN had a good phase 3 news. That's up 170%. Nothing really to do with that one. Dara, small cap, up 24%. Nice move there as well. So, there's some movers and shakers out there. But for the most part, just going back to the market to summarize, guys, just taking a look here, spiders continue to be on the flat line with the markets just down slightly. Let's go back to the 10-minute. And you can see the market. See all these little tails? That means the light volume is you're trying to get little buyers to support it. But there's still, I mean, even in the light volume here into the 3 o'clock time frame, there's still net sellers. So we'll see where this market closes today. I'm very curious to watch. As of now, it looks like the market is down slightly. Will we see a buy program into the close, or maybe even a sell program? Time will tell. Come join the intraday stock chat if you're a day trader. If you're a swing trader or investor, then you're looking at the Research Center. There's a 7-day free trial. You get swing trade alerts. You get entry exits points. You get live broadcasts. You get everything you need to combat and make money in the market, whether it's going up or down. So come to InTheMoneyStocks.com and try out that Research Center, folks. We'll talk to you soon. Take care.